And welcome to Chart of the Day Cafe for Thursday, June 8th, 2017. Read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice, not making any recommendations, always for your further homework. Good morning, Sue here on what is turning out to be a big news Thursday. A lot of things to keep an eye on today. We've got an ECB rate decision coming in a little later this morning. I'm filming this at about 7:45, so that decision has not come out yet. Comey's testifying, and there's some election news coming out of the UK. So keeping an eye on a whole lot of things along with our price. So with that, let's get into today's chart. We always start off with a look at the Russell Index, and for that we use the IWM, which is the ETF that represents the Russell 2000, and we step back to take a look at it on a 5-year monthly time frame. We've been keeping an eye on this pattern up here, this little wedgie pattern identified by our orange line and our black upper trend line. Why? Because we had a softer candle in the month of May. A little bit of price weakness came in after a series of candles that reflected some sideways price action, and then a red candle came in. So we certainly don't want to see any more red coming into the candle for the month of June, so we're just keeping an eye on that here. I'm going to move it away from the 5-year monthly to the 1-year weekly. Same orange line, same black line. We've been talking about how price on the Russell seems to lose steam when it hits our black upper band here, or upper line. So that happened in the middle of February and price sold off. Keep in mind these are weekly candles, and then it came back up, hit it again in the end of April and sold off, and here's where we are right here right now. So we'll see how it behaves in this area. Having said that, the candle for last week has a nice bullish orientation to it for the most part. I'm going to move it away from the weekly to the 3-month daily. Here's the price action on the daily. We use this blue line, which is the 8-day EMA, as our guide. And you can see that there's a little wedge pattern forming here. Doji yesterday, wick at the top, wick at the bottom, indecision. So we'll see which way the market decides to go following that doji. Futures are looking to start off in the green. It's still kind of early in the morning, but looks like the market is optimistic to start the day. So we'll see how, after all of that news coming in today, we end up. But with price overall up and over the 8-day EMA, we will be putting a new chart forward this morning. So with that price strength continuing in the markets overall, we are going to put Celgene Corporation, ticker symbol CELG, on the NASDAQ exchange, forward for our watch list today. Before I get into the chart, let me tell you a little bit more about the company. Celgene Corporation, along with its subsidiaries, is a global integrated biopharmaceutical company. They're a big one. They're primarily engaged in the discovery, development, and commercialization of therapies designed to treat cancer and immune inflammatory related diseases. You know, at Chart of the Day Cafe, it is all about value, and Celgene has a very nice high value score. Second thing I look for is growth, and Celgene has a current forecasted earnings growth rate of 21%. Third thing I look for, can't always get, it is not a must like value and growth, is a dividend yield, and unfortunately in this case Celgene does not pay a dividend. But it's a great company, great looking chart, so I want to have it on my watch list. Current PE of 16.51. So with that, let's get into the chart. We're looking at the 2-year weekly chart. You can see it's had this sort of rounded bottom pattern taking place here, and currently in an uptrend and sitting at an area that may offer some support. We will see. So I'm going to move it away from the weekly to the 6-month daily, and you can see price dipped a little bit below here, but I like this pattern. I like the way it is sitting on our line. Should the markets have a solid day today, I will be keeping an eye on Celgene. I'm going to zoom it in a little bit because I want to show you what the study we use is. I like to see the pink, which is the 3 EMA, cross up and over the blue and price lift off my area of support. So interested when the pink is trading above the blue, not when it's below. So that's what we use as our guide. I know everyone has their own way of doing things, but that's what I like to see. So currently we do have the pink up and over the blue. Whenever we put a new chart forward for our watch list, we always like to take a look at the sector that it's in. And for that, we're looking at XLV, which is the ETF for the healthcare sector. Celgene is in this sector. And as you can see on the 2-year weekly chart, nice uptrend, and it continues to show strength. I'm also going to show you, along with the healthcare sector ETF, IBB, Celgene is contained in both of these ETFs. We're looking at the 2-year weekly chart, so not an uptrend necessarily in IBB, but sort of a rounded bottoming pattern shaping up here. So should price strength continue, IBB may start to show lift in this area. So showing you both those ETFs, XLV for the healthcare sector, IBB for the biotech sector. Celgene is in both of these ETFs. Also, we like to take a look at seasonality. And for that, we go to equityclock.com. Excellent site, really like it. And here is the seasonal chart for Celgene. You can see that in the month of June, it just starts to show that beautiful price strength. No guarantee that happens this year, but always nice to have that information and know it before you make decisions. Also, wanted to flag a couple of articles for you. The first one is a Motley Fool article. I will include it with today's video, Top Health Stocks to Buy Now. Celgene is on the list. As well as, I'm not sure if you have a Barron's subscription, but this is an interesting article in Barron's. I know that Celgene was one of their top picks for 2016, and it looks as though they've got a strong forecast for healthcare stocks in 2017. Now this was dated back in December. We are halfway through the year, so if we're going to get that gain, it's got to start happening pretty soon. But wanted to include this article as well. We also like to take a look at FinViz to see if our watch list pick has analyst support. And you can see that for the most part, Celgene does. It's had a couple of downgrades not too long ago, but they were from buy to hold. And the most recent one was a buy recommendation. So for the most part, these are pretty positive. Also, great list of articles that I would encourage you to take a look at if you were going to consider Celgene. So with that, I will put Celgene forward as my watch list pick for today. And we will put our next video out on Tuesday. Have a great weekend, everybody. Oops, forgot to check the boxes, so we'll go ahead and do that now. And so to summarize, let's go back and check the boxes for Celgene. We started the video today with a look at the Russell Index. We always want to make sure that it's moving higher before we put new charts forward. And we can see that the Russell, although in a little bit of a sideways pattern over the last several months, currently has price up and over the 8-day EMA on the daily chart. We looked at the two sectors that Celgene trades in. First one was XLV, which is the ETF for the healthcare sector. We can see that it's in an uptrend on the 2-year chart and at an area of possible lift. We also looked at IBB, the biotech ETF, and it has a rounded bottom. Not quite in an uptrend, but just showing a rounded bottom. We will see on that one. CELG, Celgene, is in an uptrend on the 2-year chart and at an area of possible continuation and lift. It's got a good value score. It's got a good growth score with a forecasted earnings growth rate of 21%. I don't have this box checked because it does not pay a dividend. It currently has a 3 and 8 EMA daily cross. Seasonality, analyst support, current PE of 16.51, and it looks as though earnings are on July 27th.